Welcome, Perennial Pride listeners. Thanks for joining me as always. So, as I'm recording, this is towards the end of the summer. We're in August, which, most people are winding down their years, unfortunately seeing, which I will often hear from people, the summer was way too fast. Summer is quickly coming to an end and people are getting back to school. I was a teacher, so, she's getting her mindset back into thinking about being a teacher, and people are trying to soak in the remaining days as we approach Labor Day. Cool things like football season, some people like the cool weather. I'm not a big fan, but this is an interesting time of year. And, as people sort of reset a little bit from the summer and look for the stretch run in the year, and then we'll be in winter months before you know it, and Christmas and all that fun stuff. So it is quite amazing. And, at this time of year, it's probably the last thing that people are thinking about as it relates to their finances, certainly their tax situation, right? This is the absolute best time to be thinking about your taxes for planning purposes. Obviously, most people equate their taxes into the time they have to file, which, obviously that won't happen until next year for April. But, obviously there's going to be limited things you can do there. So this is really the best time to be thinking about it, because at that point in time in April, when you're due to file, there's going to be limited things that can be done to really mitigate taxes legally. Depending on your situation, there could be some, but they're going to be very limited, and you're not going to be able to, have much levers to pull. So even more recently, I learned through someone in my world, a CPA partner, and one of his clients came to them this year when they were filing right before it, and said he had a significant multi-million-dollar capital gain through something related to his business, and nothing was done with it. And so at the time, there's very limited options to deal with things, to be able to mitigate those taxes legally. And so it really emphasizes the need to get ahead of these things and plan. And so you have ample time to evaluate opportunities well before the year is up. So before we go into anything, obviously this is meant to just be broad strokes of education. This is not tax advice. You definitely need to be consulting with your tax advisor, a financial advisor, and attorneys and other folks to really shape your strategy around this. But that's why it's so key to start early, so you can get the right players into the mix and you have the breadth of the opportunities available to you to assess to see if they can fit your situation. Now, the main difference, obviously, most people think about taxes and they think about the filing aspect of it. It's really doing the rear view mirror. This is how I view it. It's reporting backwards, right? It's a needed requirement. Obviously, in our tax system, it is a requirement to do these things, to report it to the IRS, but it's reactive. It's looking in the rear view, and it's a needed thing given the complexity of our tax code and kind of what the rules are today. Tax planning is obviously looking in a different direction. It's planning, it's looking ahead, right, of what's happening, what could be done, what are things that we can plan for to legally reduce and mitigate taxes based on kind of current law. And so it's just the opposite. It's looking ahead and looking forward. And that's difficult for a lot of things because people are, we are in crazy, hurried lives where we're busy trying to juggle so many things from life, business, family, et cetera, you name it. To sit down and actually practically plan is a challenge for many people. If you can just stop for a moment and plan for things that aren't urgent, the benefits could be massive, but getting the time to do it is really hard. And we know, especially around taxes, the laws can be very complicated, very deep and widespread. There isn't a tax professional, CPA, enrolled agent, et cetera, that can know it all. And same with financial advisors and wealth managers. There's such a wide array, and that's why it's so key to have a broader set of team members to help support you, to give you the best sort of chance of making decisions that are good, accurate, and in your best interest for your situations. So just like any planning situation, delaying things can really limit the options you may have at your disposal. A lot of things around tax planning need to happen before the year is up. So you can't wait till April, especially if you're a business owner, but they shrink very drastically the longer you wait. It's really key to get it ahead of it. And this is why it's good time so you can, take the proper time to assess your situation and decide what's important. Some of the common misconceptions, and sometimes we never really test these things out. We just take them for granted. And one is, well, my CPA or tax pro who's taking care of my taxes is going to come up with these things during tax season, right? They're going to come up with ideas. And unfortunately, many CPAs, just given the nature of their industry, they're doing such great work in the compliance arm and helping people understand that, reporting that on time. They just don't have the bandwidth and to be able to expand outside of that, to explore strategies to proactively plan, right? Their time is just spent in the compliance arm, helping to report it, deal with IRS sort of issues, which we know can be an inefficient environment. So they just don't have the bandwidth and capacity to go there. They obviously have the brains and power to do it. It's just that they don't have the time and energy to be able to go down that path. Even though people may expect that of them, it's really putting them in a difficult position, and they just don't have the bandwidth to do it. And that's what I have come across in dealing with a lot of tax professionals. So it's just unfair to put them in that position. They just can't do it today, given today's environment. The second thing I think most people think is they don't have enough wealth for it to matter, right? Because they think it's just for the super wealthy, that those are the ones that can take advantage of tax strategies. Well, yes, it is true in the sense that there are going to be more opportunities for those who are maybe, say, accredited investors, saying making over $200,000 as an individual or 300 as a couple, et cetera, and other sort of rules around that. But even if you are in the six-figure range, you could save thousands of dollars. But, if you actually planned ahead and thought there are things you could take advantage of if you're aware of them. So don't think that even though you're not making a lot, just because you're not making hundreds of thousands or millions of dollars, you can't take advantage of some of these things. So be open to that. And, especially in the world of a W-2 or an employee, right? Business owners, I think there's a lot more that can be done in the business owner world. And obviously there's reasons for that, because there's an incentive for people to start businesses, to employ people, to house people. So those come with other advantages that the government is pushing us to do, and they come with a risk, of course. But as folks who are maybe just the high earning W-2s, a lot of what they were told, certainly even from their CPAs, there's nothing they can do, right? You can do the straight down the fairway sort of options of, contribute to your 401k and contribute to your 529 plans for college. So, none of these are bad, but they're just deductions and deferrals, right? It's not a bad option to do some, but recognize that you're just deferring the taxes in a lot of cases, especially around retirement accounts, and that someday you're going to have to pay the piper and pay taxes at an unknown tax rate in the future, and depending on how you use it and other complications. We won't go into the details of that, but that's usually what people are directed towards as their only option. Well, this is, again, till you test it and ask more broadly, you wouldn't know about these things. And that's why it's so key to ask it, right? If you're a CPA or tax professional, there are a lot of resources out there to help you at least explore it and see if they're a good fit for you. So we're going to go into some just kind of bigger picture areas for you to consider. Again, this is not exhaustive of all the things you could do from a tax perspective. How complicated the tax code is opens up a lot of potential opportunities as you go exploring, whether you're an employee, a W-2, or a business owner or investor, right? And this is where I think the business owner investment side is where the bigger benefits come to start thinking that way. You just have to expand a little bit. So on the income sort of business structure side of things, if you're a business owner, obviously there are potential opportunities as you're assessing your entity structure, right? And one of the common ones is having a business where it's electing as an S corp, right? Taxed as that way. And so as a self-employed, or you have a business where you are one of the key employees, you can get paid as a W-2, right? Payroll taxes and all the things associated with that. But then the net income of the business legitimately now will fall out and then are not subject to those sorts of payroll taxes, right? You have to do a lot of due diligence around what's reasonable comp and make sure it's all defendable and reasonable for the work that you're doing for your business, but it definitely is an opportunity and see that more often. And for business owners, there are ways you can put even more into a qualified type plan like a solo 401k or a cash balance plan. If there's significant income being produced from your business, there are ways that you can set up your retirement accounts and be able to even put more into those if desired. If you have sort of strategies to on the back end to get them out with the least amount of taxes. So there's things like cash balance plans, things of that nature. So it's a deferral mechanism, but again, coupled with other strategies, it's important to think about how you're going to use those assets down the end. Just like any thing like real estate is, when you get into investment, like, okay, you got to figure out what's the exit strategy. It's not what is just the immediate term. The second kind of area is investments. Obviously, the government wants us to invest in certain things, and they give us incentives. And certainly some of the things that people may already know around their, stock portfolios is, tax loss harvesting, trying to sort of take losses strategically against any gains that you may experience and sort of balancing them off, right? That's always a good strategy, very simply to consider. And hopefully your advisor, other folks are helping you do that, and there's systems to help people do that now. The government puts in tax credits, right? And sort of other incentives depending on, kind of energy efficient sort of investments like solar. They even and give you incentives around, not credits, but certainly incentives around direct investment in sort of oil and gas drilling, right? As a partner, right? There's other risks associated with that, but there's potential big deductions up front for the investments that you're making into those, because they know they're risky and they're trying to incent folks to take on that risk, because we want to obviously increase our independence around energy, and so they're incenting people to get into that. And is at a macro level, obviously that's people in the world who our power consumption or power use is only growing, and so that will be an interesting sort of evolution as we go forward with electricity needs and gas and needs and other areas of need that are going to obviously push incentives. So just kind of connecting the dots at a macro level, why there are tax incentives in there. And certainly things that some folks may have come across, if you have a large capital gain from sale of a business, real estate, other things, you can invest in things like opportunity zones, where they're trying to encourage investment in areas that are underdeveloped, right? And there's tax benefits around there. And obviously real estate is a big area. You can depreciate an asset and reduce the taxes on the income you generate from cash flowing assets. So those are all kind of key areas that you might want to consider depending on your situation. Unfortunately, for a lot of real estate things, unless you're an active player, a lot of those things cannot be applied against your active income. But, if you want to become a real estate professional as an active participant, then it kind of acts like any other business, and you can take some large losses against income. So those are just some things to consider. Put yourself in a position to be able to take some significant tax benefits. And then for real estate, as a rental owner, that comes with its own sort of challenges that people have to learn about. But there are certainly ways that you could eventually never pay taxes on that, if given current law, as you exchange those properties for other ones and kind of kick the can. And then a deferral strategy is to die with assets and pass them on and get stepped up in basis, where those gains are all forgiven to the next generation. That's current law today, right? But it just gives you a flavor. There are strategies that you could deploy that put you in the position to never pay taxes, versus we're often taught just defer them, don't pay it now and defer them to later, which could be very painful down the road. And some of those things you can't step up the basis of those assets, and they're eventually going to get taxed. So it's just postponing that. Some other options to consider, obviously the charitable planning is a big area. That's an area that the government wants us to support, right? To give to charities. Obviously you can do things like donor advised funds and sell appreciated assets and put appreciated assets in there, and they can donate those. There's certainly more advanced sort of strategies around charitable trusts that can be used in some shape or form, that can be deployed under control, and you can take advantage of some of the deductions associated with that, and potentially even move some of those assets outside of your state if you have an estate tax problem. And then there are other ones that are unique in that you can do leverage donation strategies, where you can take some financing to do some charitable donations that will increase that, or donate assets part of an investment group that could increase the amount of your donation to legitimate 501(c)s based on what you contribute. So there are different ways that charitable donation strategies can be deployed to reduce your income and obviously your tax burden. And the last one I want to touch on is around family and legacy. There's a lot of folks who are growing their wealth and have benefited from a lot of the asset bubbles that we're seeing today on real estate and the stock market, et cetera, are looking to pass on wealth to the next generations in a tax efficient way. There's a lot of things like gifting strategies, right? We're allowed to gift a certain amount every year that doesn't hit our exemption. So certainly there are a lot of things to consider around that if you're trying to help out your next generation or pass wealth while you're alive. And much more complicated things around trusts and family partnerships that could be formed working with estate attorneys and such to kind of shape your estate plan that could be considered. And that takes certainly a lot deeper planning, but those are also available. Leveraging life insurance, it has a lot of tax advantage components to it that could be used throughout life and certainly during wealth transfer. There's a lot of benefits around that to preserve those assets in a tax efficient manner in complement to whatever you have around stocks, real estate, et cetera. So I covered quite a bit of ground in this, and this was meant to just give you a flyover of the types of things. This, again, is not meant to be tax advice and what you should do. Everyone's situation is different, and things that are important to them are different, and that needs to be accounted for. But recognize there's probably more out there than most people recognize, and even your tax professional who's preparing your taxes, they may not even know, right? Because of the nature of their work, they're not even focused in these areas because they're just too busy in their compliance-focused world to be able to focus here to help. And so some things that you can do, now to start thinking about it are very basic. Your likely income looks like this year and how it's coming in, right? And understanding where the tax exposures are, whether it's through your income, it's maybe a big capital gain that you might experience through the sale of something. And certainly in the business side of it, what does your business look like in terms of what that net income is going to look like if things go as you plan for the rest of the year? So really understanding where the income is coming from is going to be very key. Hopefully 8-9 months into the year, you have a pretty good idea. This is where you kind of get with your tax advisor, right? If they are more progressive and they maybe know folks who are maybe in this space that can help provide some planning support to at least expose you to some other concepts that you may not be familiar with or understand. They can at least get some advice around that. It's probably worth paying for to get that advice to at least expose you to ideas, and then you can better assess whether they're a good fit for you or not, risk tolerance wise, and kind of personal goals that you may have in place. And so you can see if there's a good fit. And it also allows you a little time to sort of plan for it before the end of the year, because a lot of good strategies need to be completed by the end of the year. And there's certain things if you're being a business owner and have to act like one, there's things you have to document, right, properly to stay legally bound within the IRS laws, right? There are things that you might have to do to demonstrate you're materially participating, you are the business owner, you're acting appropriately, and it's a real business that you're running so that you're not trying to look like you're evading taxes, right? So it's important to consider these things. They do come with things and requirements so that you can stay within the law. Right. And I think that's what we always certainly where we try to strive for that. It's, you're just trying to stay in concert with the law, right? You're not trying to bend it and sort of go around it. So, certainly this comes with a lot of education and your own sort of exploration with it. But I do have a basic white paper that kind of goes through a lot of these things in basic level. It's called Strategic Path to Tax Savings. It just gives you a little bit deeper dive in some of these areas. You can download that free white paper for your own benefit to continue your education. And again, in the world of our personal finances, I'm a true believer that, there's a lot of great advice, advisors, information out there. Ultimately, you need to own your personal financial life, right, in all facets of your world. Yes, you can rely on others to help guide you, but ultimately the path for your family, your business, and all your personal goals and what you're striving for are ultimately up to you. And I do know that it's possible. It just requires you take ownership and control of it so you can maximize your wealth and make the impact you truly want to make in this world. So I hope this was helpful, and we'll see you on the next episode of the Perennial Pride Podcast. Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride Podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.